Hello, it's Jeff Christian. It's Monday morning, the 8th of June. CPM Group posted 4 short-term trade recommendations last week. The first week of June was an extremely volatile week, and it also saw the gold price weaken significantly. And as the week progressed, we hit trade recommendation target after target. The last one that the first one we did was last Monday, June 1st, and the price at the time was about 1746, and we thought it could go to 1720 over the next 5 trading days. It got to 1720 on Wednesday, and we said we thought it could go to 1700. It got to below that, like 1697 or so, by 1 p.m. on Wednesday. So we issued another trade recommendation saying we thought it could still go lower, and 1680 was our short-term target. It got to 1671 on Friday. We issued a trade recommendation, the most recent one, on Friday. Around noontime, the price was about 1673 at the time. And what we said was we thought that the price could recover a little bit, maybe 1700, possibly even 1720. But that the trend in gold prices was still downward, and we were looking for about 1640 as a downside target after we saw a little bit of a recovery, simply because the price had fallen so far. The price got up to 1701 this morning, June 8th, and as we're talking, it's about 1698. So it's been trading between 1680 and 1701 today. We still think that the price is headed lower in the short term. There's a lot of factors going on. The U.S. stock market's a little bit stronger. The U.S. dollar's a little bit weaker. Oil prices have risen. West Texas is about 38, but Brent's only 41. So the spread between West Texas and Brent remains very small, which suggests a lot of economic weakness, at least weakness in demand for oil. So I think that a $38 oil price is a little bit tenuous on a short-term basis. So we still think that there are factors out there. A great deal of uncertainty remains, but we think that there is some trend toward lower prices. And 1640 is an achievable downside target, we think, in the next week or two. There's some seasonality that kicks in. You usually see fabrication demand weaken in June, July, August. You also tend to see investment demand pull back a little bit. We've seen some very strong investment demand information coming out of China as China reawakens following its lockdown. The picture outside of China in terms of fabrication demand and investment demand is a little bit mixed right now, and it's not particularly strong on the physical side. We continue to see investors interested in paper gold, futures, options, forwards, and ETFs, especially leveraged ETFs to some extent. So we're still a little bit cautious. We're moving into the summertime. The US is starting to open up. Parts of Europe are starting to open up. We think that there is some downside on the market. That's it for today, and we'll talk to you soon the next time we have something to say. Thank you.